there's something called a Laffer curve. Okay, so basically, with a Laffer curve on a crude basis, like if you charge 0% on tax, you will have $0 in tax revenue. But if you charge 100% on tax, you'll also have $0 in tax revenue because no one will put any capital to work. The capital will flee your system, and people will do any sort of crazy planning or even downright tax avoidance not to pay, because the worst they're going to do is go to zero anyways. So,
Right.
And so somewhere in between 0% and 100% will be the maximum amount that you can raise. And on tax, like most people, pretty much agree it's somewhere between 35 and 45%. And so like if you're looking at like actually maximizing the revenue, it starts to after call it 40%, the revenue that the government collects actually starts to go down when you look at the data objectively. So people say just tax the rich 60%. It's like, all the historical data suggests that you might feel good about that higher rate, but they're actually going to get less money out of them because capital is going to flee, less money is going to go to work. Like, why am I going to take a risk with capital if the government's going to take 90% of it?